Good morning, everybody. My name's Mark Lawson. I'm Managing Director of Business Vision, Business Growth Specialists and Accountants. We've been doing live seminars for over 15 years and have produced 120 Business Builder forums during that time. But this is the very first Business Builder webinar. So thank you very much for attending today. It's so good to have so many of you come to this, our webinar on 3 A4 pages that will transform your profits, your bank account and your life. I'm delighted to say that our speaker today is the author of 7 great business books, so he really knows what he's talking about. In fact, he's also got 420 testimonials on LinkedIn, which makes him, I'm told, the most highly rated accountant in the world, and also one of the top 10 most highly rated business speakers in the UK. So without any further ado, let me pass you over to our keynote speaker today, Steve Pipe.
Thanks very much. It's great to be with you today, and I want to thank everybody to coming to listen because I'm really excited to share with you the 3 A4 sheets that are going to make things so much better for you. So there's a lot to cover. Let's make a start. This gentleman is going to change the way you think about your business forever. His name is Daniel Kahneman, and he won the Nobel Prize for Economics. Now, I suspect his Nobel Prize winning papers are somewhat difficult to get to grips with, but his book, Thinking Fast and Slow, is an absolute classic, and I would strongly recommend it to you. And he won the Nobel Prize for Economics for this observation. He pointed out that in the past, all of economic theory and therefore much of business theory and therefore much of what we do in our businesses had been based on an assumption that we all act rationally, the rationality assumption. And yet the research, Daniel pointed out, shows that in fact we don't act rationally at all. Even though we think we do, we don't act rationally much of the time. And hence the title of his book, Thinking Fast and Slow, because there are 2 types of thinking. There's fast thinking, which are snap decisions that are often biased, that are instinctive, that are habit driven. And that type of thinking is what dominates. That's the kind of thinking that we use most of the time. And as you'll see, that kind of thinking is very problematic for us as business owners. In contrast, slow thinking is much rarer, but slow thinking is where it's considered, where it's reasoned, where it's analytical. Now, we need to make sure that there's a lot more of that kind of slow thinking in our businesses, but the evidence suggests that there isn't, and that has profound implications for what we need to do within our businesses. It wouldn't matter unduly if we weren't being rational, if we were using fast thinking, if the issues were small. And when the issues are small, in fact, that kind of fast thinking is the only way that the brain can process all of the things that we have to think about and deal with in life. But when the issues are big, as they are with our businesses, when our business, my business, your business, is a hugely important part of our lives, a hugely important part of our income stream and so on. And when the issues are big, then we simply cannot afford fast thinking to mess things up for us. We have to refocus on slow thinking. We have to reintroduce rationality. It wouldn't also unduly matter if, in the business context, everything were great and if the economy were booming, but of course that's not at all the real world in which we live. And in difficult times when there are economic challenges, then again we can't afford to rely on fast thinking. We have to reintroduce this slow, considered, analytical, reasoned thinking into all of our decision making. Otherwise it's really going to hurt us. And it also wouldn't unduly matter if we use fast thinking much of the time if the accounting information that we got from the accounting profession made up for that and made it much easier for us to be slow thinkers, analytical thinkers, considered, reasoned thinkers when we need to make informed and analytical decisions based on our accounts. However, the evidence, again, suggests that that's not the case either. Back in January 2004, the Institute of Chartered Accountants published this landmark report called New Reporting Models. And look what it said. Every aircraft in the world today would be grounded if air traffic control relied on the same type of systems as companies use today to report their information. Current reporting formats provide too little, too late. In other words, even our accounts information isn't enough to give us the backdrop, to give us the evidence, to give us the analysis that we need to make informed, rational, slow thinking decisions. And therefore, we have to make up for that. We have to do something about that. We crucially have to do something about that if our businesses are going to make the right kind of decisions in order to get better results. But in fact, sadly, in the face of all this overwhelming evidence that rationality isn't commonplace, that it really matters, it's crucial that we reintroduce it when the issues involved are big as they are with our businesses, that our accounts information is simply inadequate for the purpose of helping us make rational decisions, and where we're set against the backdrop of economically challenging times, where if we don't sharpen our game, everything's going to get worse. Some people, in response to all of those facts, do this. And that's not a rational response, is it? To bury your head in a deep, dark place and hope that the issues will take care of themselves. But it is, sadly, the response of many, many other people. I'm delighted to say that it's not the response that you're going to take, because obviously you're on this webinar now because you want to do something different and you want to get better results. And that involves reintroducing slow thinking, reintroducing more analytical, rigorously analytical, considered and reasoned decision making back into our businesses, because the alternative is to act as that guy on the screen is acting, and that's not a place I'd want to be, and I doubt that it's a place that you would want to be either. So to help you reintroduce rationality, slow thinking, the right kind of decision making in your business, we're going to introduce you today to 3 A4 sheets of paper that make all of that possible, that will change the way you think about your business, change the way you run your business, change the way you make decisions forever. And the really good news is that those 3 A4 pieces of paper, which are very, very simple in themselves, are yours completely free. And we'll explain how you can get them a little bit later. The first of those A4 sheets of paper is inspired by this book, by the Balanced Scorecard. Kaplan and Norton, this is a landmark book that is used, in fact, or the thinking behind it is used by 70% of the Fortune 500 businesses, the most successful, largest businesses in the world. The challenge with the Balanced Scorecard approach, in my opinion at least, and maybe it's just me, is that it's very, very difficult to get your head around. The book is heavy and it's thick, and if you've got the time to read it and digest it and make sense of it, I applaud you. But what I was looking to try and find, what we were looking to try and find, was something which was much simpler, something which is much less difficult for owner-managed businesses like the business I run, no doubt like the business that you run, so much easier for us to get to grips with and implement and get value from within our businesses. And that's why we created the one-page plan. And I want to show you the one-page plan, and this is one of the A4 pieces of paper that will change things forever for you, and one of the A4 pieces of paper that we will give to you for free. Let me just open one up. This is a PDF version of it. It does fit on a single A4 piece of paper, but curiously, for an A4 piece of paper, in Western culture at least, curiously, you read it from the bottom up. At the bottom of the A4 piece of paper, you record on your one-page plan what the business is there to achieve, its mission, its vision, its goals, what you're trying to set out to achieve. In this case, they're building the world's leading widget manufacturing company. That's a little bit vague, but then they make it much more specific, much more smart by adding that second sentence. By the end of 2017, the business will have a 50% market share in the UK and be valued at £6 million. So that's set out with clarity and simplicity and focus, the purpose of this business. And then as you move up the one-page plan, you read the next key building block. The next key building block are what we call the key underlying success drivers. Often other people refer to them as key performance indicators, but they are the areas in which the business is going to need to really focus and to excel if it's going to deliver the thing at the bottom of its one-page plan, its mission, vision, and goals. So up here in the key underlying success driver box, the business will set out what it identifies as its the key factors that will drive its success. So one of those key factors for most businesses is whether their customers are delighted. And against that broad area, that it will identify a measurement system that it's going to put in place. It will set a target and it will measure its actual performance. And then in the light of focusing on that critical issue, comparing its actual performance against target, it will then summarize the essence of the actions that it's going to take over the next period, the next month, in order to move forward in that particular area of key focus, that underlying success driver. And then it will then look at the other key measures of that are central and critical to its achieving its goals. It's probably got to engage its people and make them happy and enthusiastic so they're pulling in the same direction and making a strong difference to the business. It's probably also got to invest in R&D and training and development. It's got to innovate. And of course, every business will have a different set of underlying success drivers. This is just a sample. This is just an illustration. But every one-page plan will be structured in the same way. You'll identify your underlying success driver. You'll identify how you're going to measure it. You'll set a target. You'll measure actual performance. And you'll summarize the actions that you're going to take in order to move the business either towards or beyond its target. Those are the underlying success drivers, and they will vary hugely from business to business because, of course, they're driven by the mission, vision, and goals, which is at the bottom of the A4 piece of paper. And that's why there are these arrows pointing up, of course. But there are two parts, two sections, two aspects of every business which are common to every business, and which therefore it makes sense for clarity to separate out and put in their own boxes on the one-page plan. And those are the factors that drive your sales and the factors that drive your cost and cash. And in exactly the same way, you'll cluster together those things which are mission critical for the sales engine within your business, your sales model. And in this particular example, it's the number of referrals they receive, it's the number of other sales leads that they've generated, it's their conversion rate from inquiry to customer, it's the proportion of customers who bought frequently, and it's the average spend per customer. But of course, it will vary from business to business, and your key metrics, your key drivers may be different. But in each case, the structure is the same. You identify what needs to be measured, perhaps it's number of referrals, you set a target, you monitor actual performance, and you summarize either the actions that you're going to take or the encouragement that you're going to give to your colleagues to keep moving in the right direction. And having identified the key sales drivers and the key cost and cash drivers, what flows to the very top of your one-page plan are the key results. And these results will usually be framed in the context of the mission of the business. So if you remember, the goal of this particular business was to build a business worth £6 million. So one of its key results is the value of its business, and it's monitoring its actual estimated value, in this case 3.3 million quid, against its target value of £6 million. And it's measuring the other key results, the other things that are a consequence of all those actions, of all that focus below. Because, of course, profits are a consequence. They're a consequence of doing the right things for the right people in the right way. And you do that by focusing on the right things. Now, that's a one-page plan. And what a one-page plan allows you to do is to put on a single A4 piece of paper everything that matters within your business, what it's set out to achieve, the key drivers, the key targets, the key results, the key actions. And by having that on a simple single A4 piece of paper, you have more focus, more clarity, more energy, more engagement, I would suggest, than ever before. And that's why 70% of the Fortune 500 use a balanced business scorecard. But I think this kind of methodology is so much easier for owner-managed businesses to get to grips with and implement within their businesses. So that's the one-page plan. And that's the first A4 piece of paper that we want to focus you on today, that will make a fundamental difference. Now, we now need to look at why is it crucial to have that kind of one-page plan thinking and reporting system within your business, and how can you create one that's tailored for the exact needs, the exact needs of your business. And that's what I'd like to focus us on next. McKinsey, the management consultants, said this, and are famous for saying this: what you can measure, you can manage. And once you start measuring through a one-page plan the things that matter, yes, you will both have the ability to manage them, but you'll also start taking the actions that means you actually do manage them more effectively than ever before. Deming said what gets measured gets done, and that's building on that first point, that not only do you have the ability to take action and manage the business better, but you have more ability to take the right kind of action, because what gets measured gets done. And one of my personal heroes, David Maister, former professor, Harvard professor, said this: the simple act of measuring something causes it to improve. That's not because of any kind of magic. It's just that once you start measuring things, then you begin at a conscious and subconscious level to start focusing on it and to start being more rational around that measurement. I think the fundamental reason why it's crucial to measure the right kind of stuff using a one-page plan, to measure the right kind of stuff. The fundamental reason is this: because people without the right information simply cannot act rationally, no matter how hard they try. If they don't have the right information, they can't make rational decisions. They can't drive your business forward in a slow thinking, rational way, and therefore they can't do what is right and best for the business unless they have the right information. Whereas people with the right information are pretty much compelled to act rationally. They can't hide behind the excuse, we didn't know, we didn't have the information. Once they've got the right information, then they're kind of compelled to act rationally. So it's much more likely that rational behavior, rational decision making, and therefore optimal results will be the outcome. So I think where we've got to is that these insights lead us to these conclusions. When you have a one-page plan at the heart of your business, you will have better goal and target setting, because there'll be crystal clarity over what the business is there to achieve and what the individual targets are that you're striving for in each of the areas that matter. You'll have better information on your progress towards those targets, and that will help you in turn make better decisions and create better action plans and follow those action plans through. Have more accountability around those actions and the consequences of those actions, being able to measure the results, the outcomes, and build into your systems the things that work best. That will mean there's always better focus on the things that really matter, more focus on the things that really matter. And also, because you can put all of this stuff on one single A4 piece of paper, there's much better communication within the business and a much stronger shared understanding of what's important, what we're doing about it, what our targets are, what our performance is, what the issues are, what the actions we have to take. That all comes from that focus, from that clarity, from those better communication and understanding. So there's more clarity. If it takes reams and reams of paper and every month through your management accounts, and if it takes a 30 or 40 page business plan, there is no focus, there is no clarity. But if it takes one A4 sheet of paper every month, then there is much more clarity, much more focus. And it's also, of course, much simpler. And simplicity is one of the key benefits of taking this kind of approach to building rationality back into your business. And those things add up to, the really good news is, better results. There's a book called Bullseye, written by Sheeman and Lingle. As you can tell, this is a screenshot I've taken from Amazon. But in their book, they found that measure-managed companies, businesses that manage themselves based on measuring the right things and taking informed, rational decisions, perform better in three crucial ways. Firstly, they have higher financial returns. And specifically what they found was that the return on investment was almost twice as high. You'll make twice as much money if you run your business in this way, if you are a measure-managed company, than if you aren't. Now, there alone, I rest my case, my lord. But they found also that, as well as helping you make more money, that measure-managed companies were also better at managing change. Most probably because, of course, by focusing on the things that really matter, that brings that clarity, that brings that focus, and it makes it easier than it would otherwise be to explain why change is necessary, to explain, to monitor the effects of change, and to keep change programs on track when you have the right information. And they also found that not only that, but that measure-managed companies were also seen as leaders. Probably because they are making more money, point one on the screen, and because they are better at adapting and managing to change, and therefore in the marketplace they're seen as leaders. So if you want to make more money, if you want to cope with change, if you want to build a stronger reputation as leaders, then being a measured managed company, the evidence suggests, is the way to make it happen. Give you a little example. Ian Howarth, a scaffolder in the northwest of England, in 3 years, using the one-page plan and board view, which I'll talk about briefly in a minute, grew his little business from 250,000 to 750,000. His profits grew in that same period from 30,000 to 200,000, and amazingly, his working day dropped from 12 hours to 4 hours a day. He was in more control, making more money, running a business that was going somewhere, that wasn't swallowing up his life, but actually was giving him back life. And those are the sorts of results, not of course those exact numbers, they are Ian's numbers, but those are the sort of results that you can reasonably expect if you take on board this measure-managed approach, if we reintroduce rationality into our decision-making, if we make sure that we don't fall into the trap of fast decision-making, of fast thinking, as Kahneman talks about, but actually we make absolutely certain that we have the information, the right information, so that we can make informed, slow-thinking decisions, and therefore take the right decisions and take the right actions, get the right results. So John Harvey Jones, one of my personal heroes, and often when I pull up this picture, people are not entirely clear who he is. And if you're under a certain age, I guess if you're under 40 or so, you probably don't necessarily know who Sir John Harvey Jones was. He's one of my heroes because he rose from being postboy at ICI to being their chairman. And he then became the BBC's first ever business troubleshooter. He did a series of TV programs. That's a photo from one of them, where he went around and helped struggling businesses put themselves back on track. And he said, and this isn't an exact quote, but this is a very, very close paraphrase of what he said, what you need to do is sit down on a regular basis with a numerate outsider to focus on the things that really matter. And if you break that down, sit down on a regular basis, I would suggest once a month, with a numerate outsider, I would suggest your accountant, to focus on the things that really matter. And that's what the one-page plan gives you, is that focus on the things that really matter in a single A4 sheet of paper. And by the way, in that phrase, you'll notice sit down on a regular basis with a numerate outsider. Why an outsider? Well, why do they need to be numerate? Firstly, because they need to understand the numbers and need to help analyse them and make sense of them with you. But they need to be an outsider, Sir John was saying, because if we're inside the business, we too readily accept all of the assumptions and the prejudices and the prejudgments and the that's just the way it is kind of thinking, whereas an outsider says, I don't know enough about this industry to say that is the way it has to be done, so let's look at the facts, let's look at the evidence, let's test new things, let's challenge everything. In Tom Peters' phrase, let's turn sacred cows into hamburgers and not accept anything at face value but put it under the microscope. And that's what an outsider will do, and that's why all of the world's most successful businesses have non-executive directors, numerate outsiders, sitting down with them on a regular basis to focus on the things that matter. And almost all of the world's least successful businesses don't. And there's a very clear distinction there, isn't there? If you want to become much more successful, then follow Sir John's advice. Sit down on a regular basis with a numerate outsider to focus on the things that matter. Now, we call that process board view. And that's where you sit down on a regular basis with your accountant to focus on the things that matter, to look at that one-page plan, to decide what it means, and then to make better decisions and create a better action plan and create more accountability over implementing that action plan to drive the business forward little by little, little by little, little by little. And that combination of measuring the right stuff and then focusing on it with a numerate outsider can be very, very powerful. If, for example, you could grow your profits, increase your profitability by just 10% every year by making better decisions and taking better actions and consequently getting 10% better results a year. If you did that for 25 years, sitting down with a numerate outsider on a regular basis to focus on the things that matter, by the end of the 25-year period, your profits would be 572% higher than they were at the beginning of it. So clearly, there is a huge amount at stake when you follow Sir John's advice. When we pick up on the key insights from Daniel Kahneman and his Nobel Prize work that we need to reintroduce rationality, and when we follow Sir John's advice that the way to do that is to sit down on a regular basis with a numerate outsider to focus on the things that really matter. And the one-page plan allows you to do that. So let's now look at some tips, some practical tips on how you can create your own one-page plan so that we can turn this theory into a usable reality for you. Ron Baker said this: imprecise measurements of the right things are infinitely more valuable than precise measurements of the wrong things. And what he was really saying there is that your one-page plan is a living document, so you need to revisit what's on it, the measures, regularly. It's an iterative process. You won't get it right the very first time you create one. And over time, you're going to need to continually revisit those numbers, and that will probably result in you changing what you measure, changing the measurement systems that you use, changing your targets. That iteration Iteration is absolutely part of the process. That shouldn't be a surprise. This will continually, your one-page plan will get better and better and better over time, more and more focused, more and more useful. It's that kind of living document. You should also, when you're creating your one-page plan, focus on SWANs. Now, SWANs are stakeholder wants and needs, hence the acronym SWANs. And really what that means is measure what matters most to you so that the business gives you what you want because you're a crucial stakeholder, but also measure what matters to your customers so that the business also gives them what they want. And let's illustrate that by looking at the story of Continental Airlines. Continental, you may know, filed for bankruptcy twice. This was a huge US corporation, but it got into massive trouble. But its CEO, Gordon Bethune, turned it around. And in his book, From Worst to First, he spelt out exactly how he did it. This is a quote. I've just added the numbers. He said, the key to success is this. You have to decide what constitutes success. If it's a fishing contest, are we trying to catch the heaviest or the longest fish? If it's a business, what are the indicators that it's doing well? You then have to explain to the people who work with you what those indicators are, and they have to buy into that. You have to measure that and let them know how you're going to measure it, and you have to reward them if they succeed. That's it. He's really describing what we call the one-page planning process, isn't he? But by focusing on the right measures. Now, it's really interesting to reflect on what do you think, because in the book he explains what he measured. What do you think that Gordon Bethune at Continental measured that he says was completely responsible for turning that business around, bringing it back from the brink of bankruptcy and making it successful again? Well, he said that we need to define success the way our customers define it, and therefore he simply measured 3 things. Within that business, they turned that business around by focusing on measuring just 3 things that mattered to their customers. Now, let's remember, Continental was a public corporation, and therefore its primary goal is to maximize shareholder return, and therefore all its entire focus is to make money for its shareholders, just that stakeholder group. Your business probably has other motivations, doesn't it? It's to give you joy and to make your life satisfying, and so that you can leave a legacy and to do enjoyable work and to do stuff that you're proud of, and to give you the right kind of work-life balance and so on. So for you, there are probably more things that you need to focus on than there were for Gordon at Continental. But it's really instructive to look at the 3 things that when he was focusing on that profit maximizing need, the 3 things that he focused on, and they were simply these: the proportion of planes that arrived on time, the proportion of luggage that was lost, and the proportion of customers who complained. And by measuring those 3 things, and those 3 things alone, and leaving no stone unturned in driving the measures on those to a better and better and better place, what did he do? He'd focus on all the things that really mattered to his customers. Because if your plane arrives where you wanted to get to on time with your luggage and there are no causes for complaints, you're going to be very, very happy as a customer. You're going to happily come back. You're going to happily pay the price. You're going to happily tell other people. Whereas if the plane's delayed, if your luggage is lost, or there's something else that goes wrong and you complain, then exactly the opposite happens. So by focusing on those 3 things alone, he was able to drive change within the business, become seen as a leader, and generate much, much better financial returns. In other words, those things that the measure managed companies get, which the other companies don't, because he focused on measuring the things that mattered most to his customers. Now, there's a big warning here, which is you need to make absolutely sure that what you measure, and it's probably not going to be lost luggage unless you also run an airline, but you need to make sure that what you measure does encourage the right kind of behaviours and not the wrong behaviours. It's very easy just to get the measurement system ever so slightly wrong, but to encourage completely the wrong sort of behaviours. Give you an example. Another airline thought that it would be a good idea to measure how quickly luggage arrives. So they put in place a measurement system whereby they recorded how long it took for the first bag from a plane to appear on the carousel so that the customers could get it. Unfortunately, what that did was encourage the baggage handlers to get one bag out really quickly and then stop and have a cup of tea. Whereas what they should have measured was the last bag, because that would have encouraged the behaviour, which was get all the bags out and then have a cup of tea. But by doing it the wrong way round, by measuring the wrong thing, the first bag rather than the last bag, what did they get? They got the wrong behaviour. So it's obviously really, really important that you choose your measures carefully so that they encourage the behaviour you want to see happen, the behaviour you want to encourage. Here's another key point. Less is more. What you shouldn't do is have dozens and dozens and dozens of measures on your one-page plan. In fact, don't measure too many things at a business-wide level at all. Only measure the things that are most important. 20 is usually too many. In fact, in the example we looked at before, there were 16, and arguably that's a little bit on the heavy side. If there are other measures that you think that are important, you can always break those down and report on them at a team level or divisional level or individual level one-page plan. But don't clutter your overall one-page plan. Remember, at Continental, they just measured those 3 things. You might not be able to get it down to 3. In fact, you almost certainly can't, but you shouldn't go above 20 either. So don't measure too many things at a business-wide level, but also be very, very mindful of what Michael Bash, one of the founders of Federal Express, said. He said, people don't mind change, they mind being changed. And the implication of that is that it's always better to do things with people, with your team, than to them. It's always much better to sit down and do things in collaboration with the people in your business rather than to drop it on them from a great height. And the implication here, the moral here, is create your one-page plan with your team, because then they'll have ownership, then they'll have buy-in, then they'll understand the thinking behind it, then they'll be happier to use it to drive change and to drive better decisions and better results within your business. So pick up on that point. And across everything you do, always do things with your people rather than to them. Create your one-page plan with them. Next key idea is assign responsibility. Make sure that for every measure on the one-page plan that someone is responsible for that measure. That's not to say that they take a fall if it goes wrong. When things go wrong, blame the system. If your current performance is below target, blame the system, not the person, but get the person who's responsible for that measure to improve the system, to test improvements, to measure the results that they deliver, and to build into the system those things that work best. So there's continual improvement driven by the numbers, owned by the person who's responsible for that part of your business. So assigning responsibility creates that accountability and ensures that things get done rather than merely get talked about. And my final big piece of advice is share your one-page plan with your team every single month. It contains everything that they need to understand about what the business is there to achieve, what's important, where we should be focusing, what our targets are, what our current level of attainment is against each of those targets, and what we're going to do differently, the action plan and the thinking behind that action plan. If you don't share that one-page plan with your team, then they'll be operating without the information that they need to make rational decisions, without the information they need to drive the business forward, without the understanding of what's going on and why it's happening and what needs to change. Whereas if you share the one-page plan with them, then they get those insights, you bring that focus, they appreciate that you trust them. Now, of course, that word trust is a big issue, and many business owners say to me, yeah, but I couldn't share my one-page plan with my team. What if they took it and showed it to a competitor? Well, ultimately, I think you do have to trust your people, but as an interim measure, one of the things you can do is you can take all of the targets on your one-page plan and index them to 100. So in other words, every single target is 100. And then you can report on your one-page plan your performance against that target of 100. 105% of target or 72% of target. And that means that almost all of the key insights from the one-page plan are still there for the team. They understand what it is that's important to you. They understand whether you're above or below targets and therefore where to prioritize their actions. But if that one-page plan ever did fall into the wrong hands, well, no one else can see what the targets are. They don't know what your customer satisfaction scores actually are. They only just know how they were compared to your target. They don't know what your investment in research and development or the number of sales leads you're creating or your sales lead conversion rates are. They simply have got a measure against target, and that's not very helpful and not commercially sensitive at all. So as an interim measure, if you don't feel yet that you can share your one-page plan with a team, then rebase the numbers in that kind of way. A couple of numbers that you absolutely must measure, that every single business, no matter what you do, must measure. And the first one is this. There's a book called Practice What You Preach, back to Professor David Maister from Harvard, and using some incredibly advanced postdoctoral statistical techniques. In that book, he sets out the evidence for how a 20% increase in team happiness can add 42% on average to your bottom line. In other words, when your people are happier, your business is much more profitable. That's not by magic. It's that an engaged, enthusiastic, happy team go the extra mile. Your customers can hear the smile in their voice on the telephone. They make things happen. They get things done. They deliver extraordinary service. They super please customers. They put things right. They prevent problems in the first instance. A happy team is a profitable team, and that's the magnitude of that profitability. And therefore, because this really matters, what you must measure is team happiness. Your one-page plan must have a measure of team happiness, and you'll notice the example I showed you before did. So first thing you must measure, every single business must measure, is the happiness of its people, because of that statistic from David Maister. The second thing that every business must measure comes from this book, The Ultimate Question by Fred Reichheld. And this was a huge research project that looked at what's the best single predictor of future profitability in any business that gives us and what's the best thing to measure if we want to understand our prospects and be able to therefore change and improve our prospects. And in his book, The Ultimate Question, he came up with the answer based on his research project. And that answer is called the Net Promoter Score. And if you type Net Promoter Score into Google, you will find tens of thousands, probably millions of search entries where a huge number of big businesses are measuring the Net Promoter Score because it really makes a difference to their ability to understand their future and create a better future. And the Net Promoter Score simply involves asking one question. On a scale of 1 to 10, how likely is it that you would recommend us? And then, not just measuring the raw data, the average on a scale of 1 to 10, but then calculating the Net Promoter Score using this formula. You take the percentage of people that scored you a 9 or a 10, those are the promoters, those are the people that are really, really raving fans for your business, and you take away from that percentage the percentage of people who scored you 6 or less. Those are the detractors. Those are the ones, 6 or less on a scale of 1 to 10. They've got nothing really very good to say about you. They're just hanging on for the time being until something better comes along. And they might even be bad-mouthing you. You ignore the 7 and 8s. They're the neutral ones in the middle. They are completely unimportant, the research shows, in terms of having predictive power to your future success. So you measure this Net Promoter Score. And by the way, a score of 50% or above is world-class. And if you've got 50% or above, it means that many, many more of your customers rate you incredibly highly, are scoring you a 9 or 10, than rate you very lowly. And when many, many more of your customers rate you very highly, what happens? They go out and tell people about you. They buy again. They don't resist when you change your price. They buy more. And because of those things, when you have that kind of very high Net Promoter Score, then you're going to have better future profitability, better future growth, better future results. Whereas when you have a low Net Promoter Score, you're going to have worse future profitability, worse future growth. And so by focusing on this measure and then putting in place actions to drive this measure up to get more and more and more of your customers rating you 9 out of 10 and less of them rating you 0 to a 6, driving up your Net Promoter Score will make a huge difference to your future profitability. And therefore, it's one of the things that has to be on every one-page plan. So those are 2 numbers that have to be on your one-page plan, but obviously you need to sit down with a numerate outsider, I would suggest, and identify the other numbers that need to be on your one-page plan. Once you've identified what the numbers are, how do you start to set targets for them? And that's where the second A4 piece of paper that we'd like to give you comes in. Because the second A4 piece of paper is a landscape piece this time rather than a portrait, and it sets out on one single A4 piece of paper how your business compares to others in your industry across 19 key metrics. It gives you your actual score on the far left hand side. It shows you visually how your performance stacks up with the rest of your industry. A long green bar means you're in the top third, a short medium length yellow bar means you're in the middle third, and a short red bar means you're in the bottom third of your industry, and obviously the exact length shows your relative position in the league table. Then in the middle, and that where you want to be column, the benchmark report that we'll do for you will also set out the sensitivities. It will show you how much higher your profits or debtor days or cash flow could be if you could emulate the results already being achieved by other businesses of the same sort of size as you in your sector. So if, for example, your margin is 25%, but other people are getting a 35% margin, it will calculate how much higher your profits would be if you could work out how they're getting a 35% margin and you could replicate it. Now, that doesn't show you how to replicate it, but it does show you what's possible, because clearly if someone else is making 35% or getting paid in less than 60 days, for example, if they're doing it, probably so can you. And with that information, you can then start looking with more energy for how you can do it too. And the right-hand side of the one-page benchmarking report is the beginning of an action plan, to helping you focus on what you can do differently, where you can look to try and drive up your profits or debtor days, or to improve the key areas of your business. So this is the second A4 piece of paper that we would like to give to you, which is to benchmark your business against the rest of your industry and show you in this simple, clear, focused way where your strengths and weaknesses lie, your scores compared to the industry, the sensitivity calculations, the beginning of an action plan, so that you can use that to begin to understand more clearly where to focus your energy through your one-page plan and begin to set targets in your one-page plan. But of course, that's only a beginning. And of course, once you've got your measures in your one-page plan, once you understand how you fit in your industry, and we give you the free A4 benchmarking page, you then need to start focusing on creating a better action plan. In other words, having got the right information to make better decisions and create a better action plan, you actually need to create that better action plan. That's the final piece of the rationality jigsaw, as it were, isn't it? That's the element of slow, considered analytical thinking that we haven't covered yet. How do you create that action plan? And the third A4 piece of paper that we'll give to you is called the Improving Your Profits worksheet. And what it does is it sets out the 8 key profit drivers that you can focus on within your business, and the 23 specific strategies that you can drill down to and focus on in more detail to start driving up your profitability, start driving up your growth, start making your business more successful. Now, we'll give you that piece of paper, that A4 piece of paper. Again, it's a landscape piece of paper, along with the benchmarking report and along with the template for the one-page plan, so that you can create reintroduce rationality into your business, so that you can get all of the benefits we looked at from being a measure managed business. And we'll give you, of course, all of those things completely free, which is really, really exciting, isn't it? We'll give you the one-page plan template, we'll give you the benchmarking report so you can see how your business compares to the rest of the industry, and we'll give you the profit improvement worksheet. 3 simple A4 pieces of paper which can change everything for you. We'll give those to you completely free of charge, and we'll sit down and explain to you how you can use them to maximum benefit. You'll get the details of how to claim that free stuff in a minute, but that's pretty much all I wanted to say for now. Thank you so much for listening to me. I hope you found it useful. I hope you found it valuable, and most importantly of all, I hope you go and use the content that we've looked at today to make more rational decisions, so that you take better and more rational actions, and as a consequence get much, much better results for you, for the business, and for the economy.
Thanks, Steve. That was absolutely brilliant. I've learned a huge amount this afternoon. I'm sure everybody else has as well. Those 3 A4 pages really are incredibly powerful. Steve mentioned about getting your hands on those 3 A4 pages free. So let me just tell you how you can all do that. Firstly, you can email us. The email address is up on the screen there, and we'll just send those straight across to you. Secondly, you can ring us, and again, phone numbers up on the screen. Or thirdly, we will be sending out a very brief questionnaire to everybody. Will take about 15 to 20 seconds to complete, and one of the questions on there is to again ask if you want those 3 A4 sheets, in which case we will then respond to that and get those to you as well. So hope everybody found something useful in there, and crucially, hope everybody goes away and now starts to take some action with Steve's advice, and hopefully you found the webinar useful enough that you'll be attending the next one, which is in roughly 2 months' time, but we will be sending people details out so that you can log on for that and register in due course. So thanks again for everybody attending today, and hope to speak to you all soon. Thank you.